they're frustrated now. They're tired of putting these hearings on every 6 months, every time one of these crypto company blows up and goes to zero. They're so unregulated. These unregulated exchanges are just, they're all going to go to zero. And what's going to come out of it eventually is going to be a regulated crypto market, which I think will be very interesting because there's real merit. I mean, crypto itself is not the bad guy. Crypto is just software code.
In today's video, Canadian businessman and entrepreneur Shark Tank star, known as Mr. Wonderful Kevin O'Leary, updates about the crypto market, his take on Bitcoin and where we are headed next in the crypto space. He also speaks about his thoughts on stablecoins, and why regulation is very important for the cryptocurrency industry to thrive in these volatile times, and urges investors to protect their assets moving forward while the suffering unfolds. Please let us hear your opinions in the comments section.
There is inflation, which makes them want to buy hard assets across the board, whether it be high-end pens, watches, cars, art. The auctions are still very, this is a very unusual recession, if indeed we are in a recession, because you've got so much capital still on the sidelines, over $4 trillion cash. So worldwide. And so, this is not your grandfather's recession. Plus you have full employment right now. And the Fed, the big debate is what is the terminal velocity of that interest rate? Is it going to be 5? Is it going to be 5.1, 5.2, 5.3%? We just don't know yet. Rates are down today after the latest data. So, there's a disconnect between the Fed pounding the table saying we're going to keep raising rates and what long-term bonds are doing. They don't believe them. And so, it's a very unusual situation. The Fed can keep making noise, but it's not working yet. And certainly it's a tight labor market. The housing data has rolled over in there, and it's not reflected properly in this CPI 6.5. The real CPI, if we actually were to take true pricing of housing in major markets in the U.S., whether that be semi-detached, rental units included, standalone homes, certainly office and industrial space, that has rolled over, and it is representing a too high an inflation rate inside the CPI because the data they use is 11 to 18 months old. So that's why you're seeing this disconnect in the bond market. Anybody that buys bonds, a fixed income balance sheet investor like me, knows exactly why these spreads have tightened, particularly on triple B credits. They don't believe that inflation is actually 6.5%. Inflation may be as low as 5% right now if we were to true up the data from the housing market. I've still kept the ratio of 30% fixed income and debt to 70% equity because I find equity is still more attractive. The way I look at equity now for the balance of this year, anybody that forecasts past a year, I don't know how you can do that, but right now I'm assuming the Fed is going to slow down a little bit and probably not pass the 5% terminal rate. And while they wait and see what happens to the economy. So most companies are starting to really cut costs any way they can. But there's been so much productivity with technology over the last 3 years that they've been doing a very good job of that. So you're going to see some earning revisions at some point. I don't anticipate any expansion to PE because we're still sitting at a 17 PE. So I don't think that's going to go up. So I'm looking for companies that A, are cash flow positive, B, do distributions of profits. So in other words, they take the cash and they distribute it through dividends. Some of them will do share buybacks, but not now that's being taxed. I think the dividend is going to be more popular. And so you have to be doing that without taking on debt. So if you have a clean balance sheet, not too much debt, and you're distributing profits, well, that's a good place to invest because you can probably make 5%, maybe 6% on capital appreciation in the next year, and maybe 1.5 to 2% in dividend yield. So I look at healthcare sector, very interesting. I like commodities. I like gold right now. I've pulled my horns in a little bit on tech because those are still trading at over 20 PEs, which is expensive. And those stocks have already had massive corrections. Media stocks are really interesting. They're fibrillating right now because of all the streaming losses, but you've seen some recovery in those names over the last 90 days as people start to say, well, who's going to survive the streaming wars and who isn't? Because media itself is an interesting business model if you think that you can get direct to consumer. Disney is under scrutiny now. I own that name. Nelson Phelps has said he wants to be an activist. That's probably good for the stock. And so you've got to find these situations. So underweighting tech, Not overweighting energy. I think energy's had a fantastic run, but I think you want to take a little bit off the table there. It's been a very, very good place to be last year. I don't think you'll get the same kind of returns this year. Finding those large cap names in the S&P that have strong balance sheets across multi-sectors that pay distributions, that's the play for 2023. It's been better than the last 2 years. Prefs, converts, bank loans, triple B and above, double B, single B and below. You can pick up anywhere from, call it, 3.9 to 5.9, depending on duration and quality, which is not bad, which is why I say 30% is not a bad allocation. Cash right now on our cash desks, we have cash to put to work. We're picking up 3.2 to 3.8%. So it's a sort of see and wait. I have been going back into the crypto markets lately. Anytime Bitcoin drops below 17,000, I add to our positions there. Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play. And I think long-term, that's a good thing. These hearings in the Senate have really poked the bear, as I like to say. And I participated in the last hearings. And when I had a chance to talk to the people on the Hill, or the lawmakers, I sense that they're frustrated now. They're tired of putting these hearings on every 6 months, every time one of these crypto company blows up and goes to zero. They're so unregulated. These unregulated exchanges are just, they're all going to go to zero. And what's going to come out of it eventually is going to be a regulated crypto market, which I think will be very interesting because there's real merit. I mean, crypto itself is not the bad guy. Crypto is just software code. It's not the software code. It's all of these rogue players and these unregulated exchanges and the issuance of all these meritless tokens, the token on the exchange, all of this crap, if I excuse my French, It's all going to go away. It's all going to go away. There's always going to be fraud. The problem is, let me give you an example. Let's talk about tokens based on, we don't even have to mention what exchange, but all the large exchanges, the unregulated global exchanges, incentivize account holders and users to buy their tokens to get discounts on trading fees. It's not new. It's been going on for years. And then they put them on their balance sheet at a ridiculous valuation. And if you look at actually who owns these things, 97% of them are owned by the issuer. You don't know who that person is because it's simply a wallet without a name on it. And the other 3% are valuing it at 60, 70, 80, 90, 100 billion dollars. Now, if there's a cash run, a cash call back to fiat, back to US dollars on $100 billion, you know that exchange is going to fail. And that's exactly what happened to FTX when a rogue player said, I've got $550 million worth of FTT tokens and I want cash by noon in 3 hours. Well, of course they don't have 500 million cash. None of them do. And so at the end of the day, this is all something that can just be regulated out of existence. You can't do that if it's a very simple regulation. You can't do that if you're a bank. You can't force people to buy your shares just to open an account. That's ridiculous. Or incentivize them with discounts. That's illegal. All I'm saying is set some rules up, and I think this is going to happen. And I'll tell you how I think this plays out. A passport system is going to be launched by regulators in major markets, US, Canada, Switzerland, United Arab Emirates, South American markets. And they're simply going to say, look, if you want access to the fiat cash in the regulated bank accounts in this geography, in this country, in this market, you have to be compliant to this passport. And they'll all have the same rules. And if you want to operate, because remember, the one thing about Bitcoin is it doesn't trade in any one geography. It trades around the world 24/7. So if you want to trade it on an exchange in Abu Dhabi or up in Canada or in Mexico or down in South America or here in the US, you're going to have to be passported, regulated. And that way, if you go offside in any market, they'll pull all your licenses. And then you no longer have access to getting cash in and out of banks. That's how I think they're going to do it. I'm speculating when I say it, but I think you're going to hear more hearings in the Senate and more of this reining in the cowboy rogue nature of what this has become. It's got to end. People are tired of losing all their money. And frankly, I think regulation doesn't have to be, it's not going to change fraud. It's just going to make it much easier for people to understand what the rules are and get rid of the rogue players. The SEC, they really understand what's going on. They just haven't had agreement on who the regulators should be. There's a turf war going on and who should actually regulate, but there will be some regulation. There's no question about it. And I think, the Toomey hearings prior to when he retired on Jan 3rd, and now it looks like Haggerty may pick up the baton. They see the merit of digital payment systems and cryptocurrencies, but they want it done in a regulated environment. And I think that will continue, and they'll continue to educate themselves, and the hearings will continue. But I think it's all upside from here. And eventually institutions want to buy this stuff, and they're not buying it yet. For all of the noise about institutions coming in, they own nothing yet. Zero.
There's going to be another FTX. In other words, people are eyeing Binance right now. They're eyeing DCG. There's news coming out of the top venture capital firms in cryptos. There's news coming out of Binance. CZ was on major media being asked hard questions about his liquidity that he fumbled over. People are worried, Kevin. Are you worried?
I'm not worried, but if you're asking me, will there be another meltdown to zero? Absolutely, 100% it'll happen. And it'll keep happening over and over and over again.
Do you think people will learn their lesson by now? Why would it keep happening?
Well, all of these exchanges, all of them, all the unregulated exchanges are having massive outflows right now. The smart money has got the joke. They saw what happened in FTX. They're not sitting around for an explanation. And if you're not willing to be audited, and I'm speaking about any exchange, if you don't have an auditor, you don't want to be transparent, you don't want to disclose ownership, why should institutional capital stay there? Of course it's not going to. And frankly, it's very hard to find an auditor that wants to touch this stuff right now because of an unregulated cowboy environment. It's all going to end. And yes, there'll be many more zeros. The only place I have any crypto right now is up in the Canadian market, which is 100% regulated. They have a broker dealer attached to an exchange regulated by the OSC, all kinds of rules. You can't commingle. It's called BitBuy. And I've got my money there. It's owned by WonderFi, a public company. I have lots of capital tied up in there. It's the only place. I'm not putting it in an unregulated exchange anywhere. Forget it. Never again. And they get audited up there. And so, frankly, if you're sitting around trying to get me to buy a token from an exchange to get discounts on trading, that stuff's garbage.
What if they have like an FDIC kind of regulation where you're protected up to a certain amount? Would that change your mind?
Well, that may happen, but it'll be the same rules. You're going to have to be a bank. I mean, Circle is pursuing that. I own a piece of Circle. I'm a shareholder. I own USDC. They have been very, very compliant. They're working with regulators, and I think that's a payment system that may come to the fore very quickly, because they are willing to go under that kind of scrutiny. And I think we may have those rules one day. We just have to treat crypto like any other asset that's regulated, and I think that will come.